Closing bell summary. Silver's High-Wire Act, January 8, 2026. As the markets settle for the day on January 8, 2026, silver has provided a masterclass in market psychology. After a bruising Wednesday that saw prices retreat sharply from record highs, the white metal spent today clawing back territory, demonstrating that the appetite for physical metal remains voracious despite technical volatility. Here is the final data and closing summary for today's session. Market tickers closing snapshot. COMEX Silver Futures MAR 26. Last traded price $78.87 per ounce. Day change 0.015 session high $78.88 MCX. Silver Futures MAR 26. Last traded price $251,500 per kilogram. Day change minus 2.82% asterisk session high $259,692. Spot silver London Fix. Last traded price $77.57 per ounce. Day change 0.0045 session high $80.20 note on MCX performance. While international prices moved green during the Indian session, the MCX price reflects a catch-up to the massive $7,311 correction that occurred in late-night global trading. Domestic traders are currently navigating a significant premium over global spot prices due to the immediate scarcity of physical bars in major Indian hubs. Intraday action, from crash to value buying. The narrative of the day was resilience. The morning flush following yesterday's report that silver briefly surpassed Microsoft to become the world's fifth largest asset. The market was overextended. We saw a sharp flush in the early hours as margin calls on the CME forced speculative longs to exit. The midday pivot, as prices dipped toward the $76 support level. Value hunters, specifically industrial procurement desks from the solar and EV sectors, centered the fray. This institutional buying created a hard floor, preventing a deeper slide toward the $72 mark. The closing lift, silver finished the session near its intraday highs on the COMEX, buoyed by fresh headlines regarding the US-Venezuela conflict, which continues to drive a flight to safety into hard assets. Critical technical observations. Today's price action confirms a double top risk is being neutralized by fundamental demand. RSI recovery, the relative strength index, which was screaming overbought at 85 last week, has cooled to a more sustainable 44.3 level. This reset provides the technical room for a fresh rally. Open interest, despite the price correction. Open interest in the March 26 contracts remains high at over 107,000 contracts. This suggests that while some speculators fled, the smart money is staying positioned for a long-term deficit play. The retail versus industrial divergence. A fascinating trend emerged today, while retail jewelry demand in Delhi and Mumbai slowed due to the high price point. The silver ETF inflows reached a 3-month high. Investors are increasingly viewing silver not as an ornament, but as a technology play similar to Nvidia comparison, backed by the fact that both silver and Nvidia have been neck and neck in market cap rankings all week. Final summary of the day, January 8, 2026. Will be remembered as the day the silver melt-up took a breather without breaking its spine. The structural deficit remains the dominant force. With China's export tabs tightening and South American geopolitical risk at a boiling point, the $80 level is no longer a distant target. It is the front line of a new era for precious metals.